Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again Christopher Martenson. He's been with me before, but we're adding today his colleague and co-founder at Peak Prosperity, Adam Taggart. Chris Martenson, as I say, has been with us before. Very admirable background, trained in the biosciences initially, and then came across the ideas that he's going to talk to us about today. And we've talked about in the past the idea that things aren't infinite. Supplies of commodities and supplies of the things that we enjoy in this world cannot be wasted forever without dire consequences, and so we're starting to see a lot of that happening now. And so Peak Prosperity addresses how we should adjust our lives accordingly, and so that we can live happier, more fulfilled lives going forward in a world that's going to be increasingly challenged. And Adam, again, this is the first time I've gotten a chance to talk to Adam. He is a co-founder of Peak Prosperity and the president. He wears many hats, but his basic job is to handle the business side of things there. With Chris Martenson, more, I guess, free to sort of think and write, and I'm sure that Adam does his level of thinking too. Indeed, he has quite a distinguished background too, having gone to Stanford, has an MBA from Stanford, and prior to partnering with Chris, Adam was general manager of chrismartenson.com. He was a vice president at Yahoo, where he worked for 9 years. Before that, he did the startup thing. MySimon.com sold to CNET in 2001. But after graduating from Brown University in the early 1990s, Adam worked as investment banking analyst at Merrill Lynch, where he received a first-hand look at all that was broken on Wall Street. And it's that kind of a background, I think, is very valuable these days, because I think most of us would probably think that things have not been all straightened out yet on Wall Street. Well, thank you, both of you, Christopher and Adam, for joining me today.
Jay, it's a real pleasure to be with you.
Really good to have you. And Adam, I'd like to start out with you. Just in reading your bio here, you discovered things that were broken on Wall Street in the 1990s for sure. And then, of course, we saw the breakdown of Wall Street to a great extent. Have things improved? Have we fixed anything since the 1990s?
No, we haven't. And as you mentioned there in my bio, I felt at the time that I had a front row seat to the dysfunction going on there, and how the playing field was sloped completely in the bank's favor and not in the clientele's favor. And it's sad to say this, but the numbers and the transgressions that I was able to see while I was there now in retrospect look quaint in terms of their size. What we learned, when 2008 happened, and we had learned about, a lot of the really bad behavior that had gotten us into the trouble that we did. It dwarfed the things that I had looked at, and as you'll hear Chris and I, I'm sure, talk about in this podcast, that none of the root causes that led to the 2008 crisis have been effectively addressed, and in fact, they've only gotten larger, and the risks have only become more extreme. So, sadly, Jay, I wish I could say that they've been addressed and things were better since my days there. But again, my days on Wall Street, which I thought was pretty high corruption at the time, now look more like kind of Mayberry in Andy Griffith show.
Well, that's too bad. But the world is as it is, and part of what you and Chris are bringing to us is the reality of the world as it is, to help us understand what the dangers are. And I should mention before we go any further that we want to talk to Chris and Adam about the book they've both put together, they've co-authored, called Prosper: How to Prepare for the Future and Create a World Worth Inheriting. Chris, many of my colleagues, people that I have on this show, and many of my friends they're sort of free market Austrian economic thinkers, and they claim that much of the imbalances, because that's what we want to talk about, a lot of imbalances in your book, financial imbalances, economic imbalances, and imbalances in the environment, that a lot of those problems wouldn't be so severe if we had some sort of an honest monetary system, a system that did not allow money to be created out of nothing, infinite amounts of money that then provide the ability to demand goods and services to live beyond our means. Do you think there's any merit in that argument?
Not only do I think there's merit, it's critical understanding if you want to know where we're going and how we got here. Mm-hmm. Now, I am very much in alignment with Austrian economics when it comes to monetary policy and all of that. And so, one of the big things that Adam and I have done, we've looked back through history and we've noted that there have been plenty of times where money or money equivalents or credit or whatever we're calling money, whether it's physical currency, paper, derivatives, stocks, bonds, doesn't matter, that there are times when those paper claims get out of balance with real stuff. And, real stuff is the actual honest production of a nation. It's the goods, it's the raw materials, it's primary wealth, secondary wealth, all the things you can touch and feel. And, history says sometimes people favor those things and sometimes people favor paper, and the pendulum swings back and forth. But we've never seen a period that's this extreme with over $200 trillion of just debt, equity markets that are about half that, but unfunded liabilities that are many multiples of both those numbers put together. It's just an insane place where what we see when we look into the future, Jay, is that the world is collectively expecting that somehow, magically, the real things that we like to claim with our money and money equivalents are going to be there in sufficient supply to justify today's prices. Mm-hmm. And those are prices for the dollar itself, or the yen or the euro, the price of stocks, the price of bonds. All of them, in our view, are badly overpriced because they're expecting, requiring, demanding a form of exponential growth in the real economy that's not only been missing in action the last 10 years, but we can't find any solid, justifiable, rational basis to say, and here's how it's going to accelerate in the future. No new internet, no new transformative, disruptive technology, resources becoming ever scarcer and tighter. Against that backdrop, we see, at best, a horizon of low growth in front of us. At worst, we see the dreaded negative growth, at which point none of the current valuations of all the money equivalents that are out there can be justified.
So it looks like we're headed for some deflation, some implosion of prices. I guess that is indeed what you believe will come first, right?
We do. That's a guess. We think that, one way or the other, we only have to answer this one question: who's going to eat the losses? Of course, the bankers and the central banks would like to have everybody have the losses shared equally by the process of inflation, nice gentle inflation, nibble at everybody's savings until all these imbalances are sort of quietly stolen away. Mm-hmm. But we do favor the idea that the most likely path at this point is a punishing deflation, one that's going to really scare the central banks, and then we do also expect them to overreact to that, as they've done at every crisis since the 90s, and put a lot more money out there, maybe this time to Main Street, and then we'll get into the punishing inflation stage. But, if you wake up in 20 years and look back, what we're going to all realize is that a whole lot of fantasy wealth got destroyed.
Yeah. Well, your book, to a great extent, it addresses imbalances in three general areas, as I think I mentioned a moment ago: energy, the economics in the economy, and in the environment. And the thing that strikes me is it sounds kind of Malthusian. I mean, I'm old enough to remember, I think it was Paul Ehrlich and the Population Bomb, or the book that was very, very popular. And we do see, exponential growth in population. So the question is, if you've got this exponential growth in population, there's going to always be demands, especially in a world where you have people voting. There's always going to be demands for stuff to make their lives more enjoyable, or at least more tolerable. So I guess, I'm wondering how that can be stopped. And maybe those are some of the ideas that we want to, if we get to them. But let's talk a little bit, if you would, and Adam, feel free to jump in any time here, but maybe starting out with you, Chris, on the energy imbalances. Just talk to us briefly about your concerns there. It has to do with the difficulty of winning oil and gas from the ground, right? It's becoming increasingly difficult.
Well, sure, I'd be happy to, and to clear something up. Our book, The Crash Course, really goes through those three E's: economy, energy, and the environment. That's real problem definition. It really describes a lot of what you're talking about. Our second book is around the other side of the story, which is, okay, what do you do about that?
Okay.
The solution side. That book's called Prosper. In the Crash Course, and we laid out a number of ideas, and a really important one is around energy. And of course, if you open the newspaper, Wall Street Journal, go to a conference, people will say, oh my gosh, the United States is about to be the next Saudi Arabia. There's plenty of oil out there. There's mm-hmm. plenty of gas. A little bit of truth to that, but there's a trend you have to watch carefully, which is look at the lengths we're going to get that new oil out of the ground with the mm-hmm. fracking, with these fracking wells that deplete 85% in 3 years. So we're on this heinous treadmill of constantly drilling these giant 10, 20,000-foot wells. to get a little bit of oil out. Look at what's happening with the tar sands up in Canada. It's just a moonscape of environmental disaster to, basically pressure wash a little bit of greasy oil off of some sand. These are all signs that tell you, Jay, that we're at that part of the story. The easy part of the oil story is over. So really we're talking in our book and our work and in our video series as well is around this idea. The age of cheap energy, particularly cheap petroleum, is over. Now the price could go down for a while, but that's going to destroy supply in the future. So we're actually very worried about where supply is going to be in 2-3 years based on the amount of capital expenditure destruction that's happened in the last 2 years in the oil industry. So we track all of that. We say, look, cheap oil is over, and we seem to be caught in this vice. The price of oil plummets because the economy is doing bad. All of a sudden, producers are not investing in new production. Many of them are going out of business, cutting dividends. And then next thing you know, you have a supply shortfall. Then the price shoots back up again. Now the economy can't afford that, so the economy does bad, and we're in this uncomfortable ceiling is getting lower and the floor is getting higher kind of a moment. That's the general trend we see in oil. Whether or not it's a great investment, we can make strong cases for it being a great investment, all that. But what we're seeing is the economy needs oil to grow and can't afford the cost of the oil required to grow. That's the uncomfortable transition we're in right now.
Yeah, I'm wondering, to what extent might the political issues, geopolitical issues, I mean, it seems as though the U.S. dollar has been strengthened, or at least has been defined as a petrodollar post-1971. To what extent do you think some of these wars might be over who controls this growing limited resource? Right now, as we see, I think I saw the other day something like 1 million more barrels being produced than being consumed. Would certainly not seem to be a problem with supply of oil at the moment. You're saying that that's because of a weak economy, perhaps?
Well, exactly. Demand is not robust for oil at this point in time. Demand growth is relatively slow, but also we're seeing oil's always been a geopolitical weapon.
Yeah.
Russia is pumping more than it's ever pumped. It's working as hard as it can. So is Saudi Arabia. The United States, bless its heart, we're also pumping as much as we know how to do, even though it's fallen off a bit. Everybody's pretty much pumping flat out, and you can say, well, they need the revenues, but really it's being used as a means of geopolitical disruption at this point in time. And, as we look around this particular stage, we say, yep, if this continues for just a little while longer, we're watching a vast amount of depletion and declines in producing fields from all over the world right now because they're just not investing. North Sea is collapsing at, 10, 12% per year. Mexico is having a devil of a time producing more. So that's all happening in the backdrop. And all the normal infill drilling is not happening. So everybody's pumping about as flat out as they can for other reasons. And, of course, all the wars that we're seeing in the Middle East, listen, let's be completely honest, a major reason is because there's oil there, because there's energy. If there weren't, we wouldn't be there.
Yeah. All right. So, of course, these issues, the 3 E's that you talk about in your book, energy, the economy, and environmental issues are all intertwined and related, of course. But, Adam, maybe you could talk a little bit about the economic imbalances that are occurring.
I certainly can. I'll also jump back to energy in just a moment, too, because it's an important point to follow up to Chris.
Sure, please.
There.
Yes.
On the economic side, the litany of economic imbalances is probably longer than we have time to list on this interview, but I think it can be summarized very shortly in the phrase Chris paraphrased earlier, which is too much debt. We simply have too much debt that's been pumped into the system, largely stealing demand away from the future and prosperity from the future and pulling it into today. And saddling future generations with the problem of trying to figure out how all that debt's going to be paid back. A big factor that we talk about in both the Crash Course and Prosper is the exponential function and how that works. And with our debts increasing as exponentially as they are, and the basically the huge transfer of wealth that's going on, even in relatively stable times like now, from basically the 99% to the 1%, or really the 0.1%. The burden of dealing with those exponentially increasing debt loads is falling on a greater number of shoulders that have greater and greater inability to actually bear it. So, at the heart of the matter, that's really what it is. When we look across our pension systems, our entitlement underfunding, massive bills that are going to be coming due, and they are absolutely underfunded, unfunded, or insolvent, depending upon how you look at it. That's sort of the macro stage that we look at when we look at what's going on in the economic scene. Now, of course, there's a lot of other things going on there that just compound the issue for the average person, and whether that's the rise of HFT-based algorithmic trading, whether that's increasingly, which we're going to detail in the new book, the forms of financial repression that are being deliberately placed upon capital in many ways, with the general public being completely unaware of it.
Sure.
People are basically just, kind of dying this, frog in the heating pot death of working harder and harder for the same dollars, and having those dollars be able to purchase less and less as time goes on. Indeed, and I wonder, I think, Adam, you said you had, maybe you made the point with regard to energy? You said there was another point you wanted to pick up on. Let me just underscore that. So, Chris talked about the dynamics that were going on there, but an important one to think of is the cost of energy, and not just the dollar cost of getting it, but the energetic cost of creating energy. And in the old days, when you got a barrel of oil out of the ground, generally, if you invested a barrel of oil's worth of energy to get oil out of the ground, you usually got about 100 barrels worth of oil back. Wow. So it was a 100-to-1 ratio. That was, 100 years ago. Nowadays, in the forms that Chris was talking about, the fracking wells, the tar sands, et cetera, you're getting down to the 5-to-1, 3-to-1 ratio. All right, so we've had a huge plummeting in the energetic return that we get from the energy we expend to get energy out of the ground. And even though oil prices are down dramatically, and there is technically an oversupply of oil in the market right now, it's a very temporary one that was caused by the race largely in the U.S. of the shale oil producers, with OPEC continuing to pump supply in the background. And that oversupply we have is it's a single-digit percentage. It's probably a pretty low single-digit percentage of oversupply. And yet it's created over a 50% price drop in the price of oil. So it's not accurately reflective of the glut we have. You hear the word glut, you think the world is awash in oil. It's really just a little bit more than it used to. And more importantly, when you look at global production over the past decade, it's pretty much been flat. So as Chris said earlier, we have been, around the world, all the players have been pursuing production as hard as they can. And basically, we haven't been able to produce any additional oil annually globally over the past 10 years, while at the same time, the dollar cost that has been spent on oil production has fully doubled. And I don't know about you, but if any business were to tell you they had just doubled their investment, well, you would expect that they would get double the return to afford it. Right. Over the past 10 years, we've doubled our investment and gotten nothing back for it. Oh. That's a good point. Well, I have to think, you talk about energy. I'm more familiar actually with the mining sector, and I know how much more difficult it's also getting, the low-hanging fruit, so to speak, whether you're talking about gold or copper or whatever the mineral is. Most of that's been gathered up more quickly. The question I have for you, Chris, or you, Adam, is we have this exponential growth in debt. We have this exponential growth in consumption and population and all these things. And yet, we see incomes, GDP, growing in the United States at best in a linear fashion. Is this because of these sort of imbalances, or let's say these additional cost of getting things out? Is that why? Is that one of the reasons, perhaps? I mean, from Austrian theory, I've got some other ideas, but is that one of the reasons why income is growing in a linear fashion compared to the demand and consumption on an exponential manner? Chris, well,
it is, and so let's just for energy, let's think about this. Let's imagine for the moment that we're getting some of this 50-to-1 oil out of the ground, right? So we invest 1 barrel, we get 50 back. That's a 98% return of energy. And, of course, the energy business is busy using energy up. Forget the dollar cost of it. They're busy using energy, but that other 98% of their return on their efforts, that goes out to society. We use it however we want. People go to ball games, they take trips, they go dog grooming, they become lawyers. We live on that surplus energy. And so to Adam's point, when you get down to 5-to-1, something magic happens when you start getting below 10-to-1 returns in energy. All of a sudden, your headroom, where you go from 98% extra, all of a sudden plummets to just 80% extra when you go to 5-to-1, right? What happened to that, almost 20%, that 18%? Where did that go? Right? Well, where it went was, you can just detect it. It goes into people finding it increasingly hard to find meaningful work, that employment just doesn't pick up as much. These are all things we predict when we say we have an economy and we're going to give it less surplus energy to be able to go out and be creative with. So that's certainly an explanatory factor. Having too much debt's another explanatory factor. Japan has proved that experiment hands down. You can print as much as you want, but as soon as you have too much debt clogging your system, you can forget about the growth. And as well, with all this financial repression in engineering has done some marvelous things, and one of them is it's allowed CFOs and companies to engage in financial shenanigans, but they make sense, right? If I can borrow at 1% and retire a stock that's yielding a 2% dividend, do it. But what happens is the companies have plowed over 100% of their cash flows from earnings back into stock buybacks, not much going into R&D. So none of these things are really conducive to high rates of growth. And then the biggest one, of course, is demographics on a consumption-based economy. Listen, we have 10,000 boomers a day retiring, and they're just in a different part of the consumption curve than they used to be, and rightly so. Japan's facing the same issue. So we look at every one of those things, Jay, as just a headwind, but collectively it's really a gale force resistance to this idea of rapid growth.
The other E is environmental. Chris, could you just talk a little bit about that? Give us some of the ideas of the problems that we're facing. I mean, there's soil nutrition, ocean chemistry is changing, the species are becoming more and more extinct. Talk to us just a little bit about that. Maybe take a couple of minutes.
Well, absolutely. This is really important. We look at both the things we're taking from the environment, and some of that, right, with depleting ore grades and things like that we've really high-graded and scraped through some of the best, everything from ore bodies to soils and easy access water, freshwater, stuff like that. And then also the stuff we're putting back into the environment, which would include the CO2 that acidifies the oceans. Simple chemistry there. A more acidic ocean supports life in different ways and typically less life. That's a huge problem that we're looking at. We've strip mined our soils for nutrients, and if you stopped the fossil fuel-based fertilizer train from going onto soils, we would lose about half the productivity of our soils. So that's putting nitrogen, phosphorus, potassium back on as macronutrients, and we need micro back in there as well. So we're farming in an unsustainable way. We're drawing water from aquifers in an unsustainable way. We are putting and taking things from the environment in clearly unsustainable ways. And so when we put all that together, we say, again, none of these things are conducive to long-term aggressive rates of growth. We're at a new part of the story, and it's time for us as a species, as a nation, to come up with a new narrative for how we're going to live into that reality. But our monetary masters only know one thing: rapid growth. They're going to keep pouring fuel on this fire until they get the result they want, and we think they're going to fail miserably because they don't understand the larger context of what they're doing.
Yeah, well, they have been failing miserably, and yet they keep doing more of it. They double down all the time. With the remaining time, we only have 6 or 7 minutes left here, I suppose, but there's some very important concepts in your book, Prosper. One of those is resilience, and what we want to do, as you mentioned, Chris, this book is more about how to deal with the problems that we have. We've so far spent almost all our time here talking about the 3 E's and the problems that are coming our way and the devastation that is likely to occur. We don't want to just give up. We want to try to find some answers, and that's what you're providing in your book, Prosper. I guess, Adam, you could talk as well about resilience. What do you mean in the book when you talk about resilience?
Sure. Well, resilience is basically the ability to return to your pre-existing state given some sort of insult. So it's really your ability to deal with adversity without being broken by it. Mm-hmm. And the conclusion that we come to from the crash course in our analysis of the 3 E's is that the one thing we can predict with absolute certainty is that change is coming. And in many ways, a lot of these changes are going to feel quite different than what we've been used to, and a lot of them are going to feel like losses or negative changes to people. We're just going to not be able to do as much of what we used to be able to do, and there probably will be some breakdowns in that process as well. Probably some additional financial crises, thinking back to 2008. On the energetic side, think about when oil spiked up to $150 a barrel. We could see that easily happening again in a couple of years, perhaps going even higher. On the environmental side of things, it could be anything from continued droughts to more extreme climate change to failures in the food system, whatnot. And of course, all this is going to impact different locations differently. So because we know that the likelihood of the changes is high and that their potential downsides is high, but we can't exactly predict the when and the how intense for the individual, we encourage people to cultivate resiliency, which basically means there's lots of steps that you can take today that should these forces arrive in full force as we predict, you're going to be much less impacted by them than people that didn't take these steps. And we have a framework that we use to describe resilience. We basically encourage people to develop capital, and there's really 8 different types of capital that we think are important for building resilience. Money is one of them. Financial capital is definitely an important component, but it's only one of the 8. And the book really does a good job of walking people through the other 7. And, in Chris's, in my opinion, again, money can be a helpful tool here in building resilience, but money by itself certainly is insufficient. And the other 7 forms of resilience are just as important as the monetary side. But the last thing I'll say about this before handing the ball over to Chris is these types of investments that we recommend are good investments of your time and energy to make, even if we are completely wrong, even if the future looks exactly like the present for the rest of our lifetimes. Encouraging people to get healthier, to develop stronger relationships, to build community, to work on their emotional health, to safeguard their personal finances. Nobody is going to look back in time and regret doing any of those things. In fact, these are all life-enhancing catalysts no matter what happens. And of course, if some of the changes that we think are going to happen, in fact, do materialize, the benefit of these investments is going to have an outsized return because then it's really providing protection for you.
There's so much in this book to cover. I mean, I would like to cover financial capital because this show deals more in that realm. But I would just say to our listeners that Prosper is a book that you must read. You've got to get a copy of this because I think unless you completely dismiss what Chris and Adam are saying, this is very, very important. But even if if you think that this doomsday scenario is way out, unrealistic, as Adam just pointed out. There's a lot of great ideas in there about how you should live your life in any event. And so I think you've answered, probably Adam answered a lot of my questions here, why resilience matters briefly, but of course the book goes into a great deal of depth about that. So what should people really be doing now? I mean, it's, as you point out in the book, it's very difficult. Change is difficult for people. And, I live in New York City, and I think about what happens if the bridges are blown up or if something happens and food isn't coming into the city, and what do I do then? I don't even own a boat. I can't get out of here. What should people do? Chris, we were talking before we went on the show here that you live in a rural area of western Massachusetts where you can kind of do a lot of things. Well, just give us an idea of what sort of things should people be looking to do. What should they start to do to prepare for these difficulties? I mean, the idea of generating and becoming more resilient, but practical things that people might start doing right now.
Well, sure. So it really, the genesis of writing this book is you ask the exact right question, which is, what should I do? You lay out the big 3 E's case, and people are aware of the trends, and they have that gnawing feeling, in the pit of their stomach, and so they ask that question, what should I do? And so what we do is we counsel people to really take a good hard look at where they are strong and where they are weak with respect to these 8 forms of capital, financial capital being one. And there we would very practically advise that people begin with a solid assessment, knowing their balance sheet, their income statement, their cash flow, like really doing the hard work of knowing exactly where their money is if they haven't done that, and then figuring out how to set aside a portion of that for these other resilience activities, and then making sure that the remaining balance, if it's going to stay in the financial markets, that it's managed safely and managed well with eyes wide open for these new risks that are out there, which can include everything from a bail-in to another MF Global to you name it, right? So who knows, but like all new risks. And then once you've got a set of ideas around really where you're going to put your finance, that's one of our longest chapters. We've got a lot of ideas that span everything from gold investing to investing in the markets, et cetera, is then to take stock of where you really would want to begin to put your next efforts. And so to give one example, we think that social capital is going to be a very, very important determinant of success. So in your case, your social capital might be improved if you find somebody who has a boat and become his best friend, right? That would be good. So we have some examples all through history where people foresaw trouble coming, like they lived in Zimbabwe. They knew that currency was about to go belly up. They stockpiled food. They bought petrol, and a year later, all the stockpiles were gone. And they had 7 more years of hardship. The people who did best had deep, trusting networks of people with whom they could operate and still get what they needed, and they did the best. So we recommend social capital is something that you actually think about, maybe not even on mercenary terms so that I can get what I need in the future if X happens, but because it'll improve your life today. And because having deeper, richer connections with people are the things that people regularly look back on and say, that's actually what's important in my life. So we really advise people to, get out of this bubble that we're in. If you're on the couch, if you're isolated, if you're, somehow locked away from humanity, because that's the life many of us it's easy to fall into in our current culture. Steps to break out of that and begin forming these deeper connections.
That's absolutely great advice. I think even in the best of times to live a more joyful life, I think it's being social and helping each other out when people are in need, for sure. In any event, some of the other forms of capital: living, material, knowledge, emotional, as you mentioned, social, as you mentioned, cultural, time. All of these, the book goes into great depth, and I, again, would just like to really strongly suggest to my listeners that you pick up a copy. Adam, where can people go to buy this book?
Well, they can go pretty much everywhere, which is the great story. So the book is available today in print. It's available as an ebook. It's available as an audiobook. It's available at pretty much any major bookseller, online or off. And if you want to learn more about it, get a little bit of background of the book, why we created it, et cetera, you can go to peakprosperity.com/prosper, which also has links to all the different ways I just mentioned to buy the book.
Excellent. And I think I believe both of you are involved also in putting together some seminars or some group gatherings from time to time. Is that right, Chris?
It is. We usually do 1 a year, sometimes 2, and these are great times for people to get together. And, Jay, what's fun about these is, honestly, once we've assembled the people who are interested in this subject, we could literally get food poisoning for the rest of the weekend, and people would still have a great time because it's a meeting of the minds. And we have a wonderful time going deeper into all of these subjects and really talking about where the world is, what we can do about it. And it's just it's so wonderful to see people meet each other. They're doctors, lawyers, engineers, the housewives. I mean, they're just ordinary people, many of them very successful, who have a chance to get together and talk freely.
All right, and people can learn about these events at peakprosperity.com, I suppose?
peakprosperity.com/event.
Excellent. Very good. Well, thank you very much. I'm sorry we're out of time. So much more to talk about, but at least people should have an idea of the importance of reading Prosper. So thank you very much.